welcome to this month's Fintech Firebrand. I'm Virginie O'Shea, founder of Firebrand Research, and I'm here to chat to you about this month's Fintech and finreg news. Now, it's been a bit of a slow start to the year, all admitted about from the finreg front. We haven't had a huge amount of progress on a lot of things, but we have had some interesting discussions and developments this month, not least of which is the Securities and Exchange Commission and the CFTC, the Commodity Futures and Trading Commission in the US, making a historic announcement about a memorandum of understanding between the two regulators to cooperate for the good of the industry and to coordinate their regulatory proposals. Now, there's long been something of a rivalry between the two regulators over certain turf areas, dare I say, over recent years, not least of which was crypto. But they seem to have changed their approach and do seem to be working much more closely together. Interesting to see that. It will be interesting to see how much they're cooperating with the other regulators in the US. As we know, there's lots of them, and also other regulators around the globe. Will there be more coordinated activity from that front, especially when it comes to global markets? Certainly much to think about in the coming weeks. In Europe, or the EU more specifically, there's been a lot of focus on encouraging more retail investors to engage in savings activities across the region. And now part of that, we know that part of the Savings and Investments Union is looking at how to encourage these retail investors. So it has been a priority for the ESAs, the European level regulators, such as the European Securities and Markets Authority, or ESMA. And this month they put out a consultation paper about how much complexity retail investors face when they're starting to invest in the capital markets across Europe. Now, there are some proposals and different actions that they could pursue to make the investor journey much more accessible, including simplifying some of the disclosures. Some of them are quite complex and lengthy to read through. And also helping investors understand specific risks to them. And some of these things, it would involve improving access via digital means rather than having to go through paperwork. So disclosures and disclosure simplification is at the core of a lot of this. And part of it's also having mobile friendly formats for a lot of this information. As we know, a lot of retail investors or younger retail investors may be accessing things like Reddit, TikTok, all of these online platforms to get recommendations and advice. And that's why we've seen in the UK, in other news, some of the finfluencers or financial influencers on those platforms getting fined or facing criminal proceedings in some cases for misinformation being spread to retail investors. So certainly regulators across the markets are very interested in the finfluencer, the rise of the finfluencer. I think I've been talking, it's a very hard word to say, but I've been talking about it for a little while now. Certainly a big part of that retail investor protection effort in the UK as part of Consumer Duty, but also in Europe as well. So interesting to see all of these different areas of focus for the regulators. And it will be interesting to see what kind of feedback ESMA gets to this consultation. And again, back across the pond, there was an interesting discussion hosted by the SEC on the topic of the responsible retailisation, I should do air quotes, as that's how they described it, of private markets. Now, there's been a little bit of a slowdown, let's say, from the institutional side in private markets. We've seen some of those markets face some difficulties over recent months, and we have continued to see growth in certain areas. Those private equity, for example, has continued to grow month on month, but certainly some of those other areas like private credit may have been facing somewhat of a slowdown. But the SEC was keen to have some of those discussions with the industry, so organised a half-day set of roundtables on the topic of retailisation of private markets. And there was a lot of discussion about what needs to happen to set effective guidelines or regulatory sort of rails and guardrails to protect investors as these markets become more accessible to retail investors, as that is an eventuality in the eyes of the SEC. We have seen that in other jurisdictions, such as Europe, with the LTIF and in the UK with the LTAF, the long-term asset funds. Now those funds are, closed-ended funds. They are, there are restrictions for those funds. It remains to be seen what will happen in the US with regards to the retailisation of private markets there. Will it be, combined funds like in the EU or and UK, or will it be something else? We have some questions around that. There was also a fair amount of discussion during the US roundtables on tokenization and what that might do with the fractionalization of private markets in particular. So definitely a lot of interesting topics, a lot of food for thought were discussed during those roundtables. I expect the recording will be up on the SEC website at some point. I haven't seen it yet, but definitely it's worth a watch. Some of the key themes relate to a lack of transparency, particularly around some of the data points that you need to assess risk and to be able to do effective valuation and pricing of these assets. So certainly, obviously, we're not talking about the kinds of assets where you have, real-time pricing. These things tend to be a little slower than that, a little less accessible, and have a lot of documentation behind them. So certainly a lot of food for thought on that topic with regards to digitalisation and what the tokenisation might mean for that as well, not only from the front office perspective, but also in the post-trade context as well. As you know, I love that topic. We do see, on the topic of post-trade briefly, we do see more progress, more engagement by European regulators across the board looking at their markets moves to T+1. More and more guidelines are coming out from industry associations as well, particularly around things like hold and release and partial settlement. So best market practices for firms to follow. Definitely check out some of the websites like AFME for some of those topics. And obviously, the T+1 industry committee from the EU perspective, or the Accelerated Settlement Task Force on that topic. Firebrand will be doing some videos dedicated to answering some of your questions on T+1, so do look out for those soon too. It's all go on the post-trade front this year. Now, once again, it's International Women's Day, or it just has been, and it's Women's History Month in the US, I believe. So certainly, definitely time for me as a female founder to talk about how much progress or lack of progress we've made with regards to female representation across the board. We haven't actually seen much progress over the last year. In fact, we've seen somewhat of a step back with regards to the number of female CEOs at Fortune 500 companies. We've seen a reversal of some of the DEI practices that financial institutions had been putting in place, walking back of some of that work. So definitely don't lose heart, but certainly we do need to keep pushing for change, and it's certainly something we need more data on. The UK put out an interesting set of proposals, or an initiative, I could call it, but it's actually voluntary rather than mandatory, for more action for firms to reveal if they have over 250 employees. They need to be talking about what they're doing to address the gender pay gap, and also to put in place some degree of program related to menopause support. Now, this doesn't go very far, but I guess it's something. Definitely would like to see more progress on this front, but definitely would like to hear from you guys as well what you think would be the most effective strategies for addressing the gender pay gap. So definitely need for more data and research on that topic as well.